An actuary's day might not sound as thrilling as that of a rock star or an astronaut, but make no mistake, actuaries have one of the most important and intellectually engaging jobs out there. They are the quiet masterminds who work behind the scenes, using math and statistics to predict the future. But instead of crystal balls or tarot cards, actuaries rely on hard data and sharp analytical skills to forecast events and help businesses navigate uncertainty. Think of them as the fortune tellers of the financial world, only their predictions are backed by logic and probability. Actuaries play a vital role in insurance companies, pension funds, and investment firms. Their work might focus on estimating the likelihood of events like accidents, natural disasters, or even how long people are likely to live. They're the ones who calculate how much a company should charge for insurance, how much a pension plan should set aside to pay retirees, and how to invest money so that businesses can grow without risking too much. In short, actuaries help manage risk. And if you think about it, life is full of risks, big and small, so their work touches just about everything. Let's dive into a typical day for an actuary. The morning often begins with a cup of coffee, or tea, depending on the actuary's preference, and a review of recent data. Data is the lifeblood of an actuary's work. Today, it might be information on car accidents, healthcare costs, or changes in interest rates. Armed with this data, actuaries apply mathematical models to predict future trends. These models are like sophisticated algorithms that crunch numbers and estimate probabilities, helping actuaries answer questions like, how likely is it that a policyholder will file a claim this year? Or, what are the odds that a storm will cause significant property damage in the next decade? Actuaries often find themselves juggling multiple tasks throughout the day. One moment, they might be evaluating an insurance company's reserve funds, ensuring that the company has enough money set aside to cover future claims. The next, they could be meeting with other professionals, like underwriters, financial analysts, or company executives, to discuss risk management strategies. And while their calculations are rooted in statistics, the real art of actuarial work lies in interpreting those numbers to help businesses make informed decisions. There's a famous quote by John Tukey, a brilliant mathematician, that perfectly captures an actuary's mindset. The best thing about being a statistician is that you get to play in everyone's backyard. Actuaries truly do get to play in a variety of fields: finance, healthcare, disaster management, and even sports. Yes, actuaries help teams make decisions based on player stats. Wherever there's risk, there's room for an actuary to shine. One of the more fascinating parts of being an actuary is their role in predicting life expectancy. It may sound a bit morbid, but this work is critical for things like life insurance policies and pension plans. Actuaries need to understand the factors that affect how long people live, things like lifestyle, medical advancements, and even geography. For example, did you know that people living in certain countries like Japan have some of the longest life expectancies in the world? Actuaries study trends like these to ensure that insurance companies charge the right premiums and that pension funds don't run out of money as people live longer. There's a story about an actuary who worked on calculating life expectancy back in the 19th century. His name was Benjamin Gompertz, and he developed what's known as the Gompertz Law of Mortality. This law suggests that the risk of death increases exponentially as people age, and it laid the groundwork for modern life insurance calculations. Gompertz's work has stood the test of time and is still used in actuarial science today. It's a perfect example of how actuaries have shaped industries for centuries. In today's world, actuaries are also playing a big role in tackling climate change. As extreme weather events like hurricanes, floods, and wildfires become more frequent, actuaries are tasked with predicting the financial impact of these disasters. They analyze climate data, assess potential damage, and help companies and governments prepare for the worst. It's no easy job, but it's one that's increasingly important in a world facing environmental uncertainty. According to a report from the Society of Actuaries, climate-related risks are now a top concern for insurance companies worldwide, and actuaries are at the heart of developing strategies to mitigate those risks. As the day progresses, an actuary might be deep in a project that involves running simulations, lots and lots of simulations. These simulations are like running 1,000 different versions of the future, each with slight variations, to see what might happen. For instance, an actuary might simulate what would happen to a retirement fund if interest rates dropped unexpectedly, or if more people than expected decided to retire early. By running these simulations, actuaries can create a range of possible outcomes and help companies prepare for each scenario. One actuary once joked, "We don't predict the future, we create a map of possibilities." That's a great way to think about it. Actuaries don't know exactly what's going to happen, but they create a detailed guide to help businesses navigate whatever comes their way. Actuaries also have to stay up to date with the latest trends in mathematics, economics, and data science. The world is always changing, and so are the risks that companies face. Take the COVID-19 pandemic, for example. Actuaries around the globe were suddenly tasked with assessing the impact of a global health crisis, something that hadn't happened on this scale in over a century. They had to quickly adjust their models to account for new risks, like increased healthcare costs, changes in life expectancy, and economic downturns. It was a challenge, but actuaries are nothing if not adaptable. By the end of the day, an actuary might look over their work with a sense of satisfaction, knowing they've helped businesses manage uncertainty and make smarter decisions. Whether they've worked on calculating insurance premiums, analyzing retirement plans, or assessing risks tied to climate change, actuaries contribute to the stability of entire industries. There's a certain satisfaction in knowing that the work you do helps protect people's livelihoods. Actuaries may not be in the spotlight, but their work is felt everywhere, from the policies that protect homes and businesses to the pension funds that support people in retirement. And as the world continues to change, actuaries will remain essential, helping us all navigate life's many risks, one calculation at a time. As Warren Buffett once said, risk comes from not knowing what you're doing. Thanks to actuaries, businesses and governments are far better prepared for the risks ahead, ensuring that people's futures are more secure. So, while a day in the life of an actuary might not be filled with flashy headlines, it's a day spent making the world a safer, more predictable place, one spreadsheet at a time.